The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. Let's take a look at the stacks, folks. It's a moment of truth up here. We've been struggling up at this this 0.618 level, and as you can see, that smaller triangle there is nothing more than a reverse point wave. Now, we do have Rich Anderson coming on at the half hour, which will be a lot of fun. But I got several emails about the conversations that we had last week with one of our guests that were here. We had went to lunch with some folks, and we were talking about the old times and stuff. And we were talking about some of the things that happened. And I have to share the story because they've asked me about it. It's one of my most memorable days at the racetrack. It was 1970, and Eddie Horwitz, who worked with Amos Hofstadter at Hornblower and Weeks years and years ago, and also worked at Commodity Corporation as an attorney in Los Angeles, my good friend. And his passion was betting on the horses, but he only bet like 6 or 7 times a year. He would follow these horses and their training, and would wait for a really big long shot, and then he would make that bet. So we're out there to bet on a horse called I'm an Old Pro, and the horse was about 50 to 1. And Eddie said, "You ready to go to make the bet?" And I said, "Okay." So we walked up to the window. He went to the $50 window. I went to the $5 window. I bet $25 to win, 25 to place, 25 to show. So the horse should finish first, second, or third. I come back, and he said, "How much did you bet?" And I said, "I bet $75, 25 across the board." And he looked at me and he said a few expletive words, and then he said, "You know, you really don't have any respect for me at all, do you, Larry?" And he was really serious. I said, "Speedy," I said, "what are you talking about?" I said, "I think the world of you. I'm out here, aren't I?" I said, "You know, you went with you in the morning to watch this horse run." He says, "Well, if you don't think he's going to win, why'd you only bet $75? And I said, "Well, that's what I thought I should bet." And he said, "How much money do you have on you?" I said, "About 700. He says, "Go bet the horse like you should." So I went over and I bet everything. I bet the whole thing. I bet 500. No, I bet 400 to win, 200 to place, and 100 to show. I bet $700. And so we get back to our seats, and the horse is 50 to 1, and the bell goes off, and away they go. And I'm an Old Pro. Takes off, and his jockey was named Bobby Howard, and he took off, and he was 5 lengths ahead. And he gets to the quarter pole, and he's about 7 lengths ahead. And he gets to the half pole, halfway through the race. He's about same, and he gets to the 3/4 pole, and he's losing a little bit. They're catching up with him, and he gets ready to turn for home, and the horse explodes, and he just runs all the way to the end. He runs wire to wire. And I collected $25,700 on my bet. And when I got home, my wife was really great because she allowed me to keep 700 of it. So it was really a winning day. Anyway, that was one of my old stories. I could have embellished it a little bit more because there was a lot of things going on, but that's neither here nor there. I'll share a few others down the road, but when we went to lunch, everybody got a big kick out of it, what happened. And the other story, of course, was with Mark Douglas. He would come out, and I'd met Mark in '83, and he came out to visit us for the first time in '85. We were still living in Westlake Village, and he wanted to go to the track to see some movie stars. And so I took he and Paula and we went out, and as we pulled into the turf club there at Hollywood Park, Don Adams from Get Smart was there, and I'd been a big friend of his for many years, playing poker and stuff. And you know, he called me by name, and that really, you know, they really got a kick out of that. And he said, "Why don't you join me today?" So we went up there, and we were sitting with him, and in walked one of his buddies that was there for the day, and it was Tim Conway. So we sat there for 3 hours listening to them kibitz about the old days and some of the people, and that Mark never did forget that. Of course, neither did Paula, but those were some of the fun days that I had. And I had left Drexel 3 years before that. So it's didn't get there very often. But that's it, folks. I'm not an inveterate gambler. I do play poker, but poker is not gambling. It's intelligent risk speculation. At least that's what I tell myself. I do pretty good at that, and I do play the horses. Not very often, but when I do see one, I make a small bet. The most I ever bet on a horse is $60, 20 across the board, and have a little fun with it. That's about it. I don't expect the days of 25,000 anymore. But you never know. Okay, let's take a look here at a chart that we got from the Elliott Wave, folks. Oh, no. Oh, it's going to come up. Oh, thank goodness. Let's just get this up here so we can take a look at it. This is a chart. Hold on here 1 second here. Yeah, Carol Burnett, what a class act that woman is. Here it shows the daily sentiment here of what's going on in the stock market. There's quite a bit of bullishness, as you can see. It's around 91%. Back there on December 26th, when we were down at that 61% retracement, we were at 4%. And you can see where we are now. We're up into this area. That should be pretty interesting. So we'll keep an eye on that. By the way, I did give an order on Sunday night to sell the Dow Jones. We got filled. The problem was, folks, I put a stop in. I meant to put a 200-point stop, and we sold it at 26 and change, and I put a stop at 28 and change, and that was wrong. It was supposed to be just 200 points. So I've corrected it twice. So if you're listening and didn't get that correction, make sure that you put that stop in correctly, because that's it, folks. When you're looking at these charts, like we're looking at here with this Dow Jones chart, with this what do they call it, optimism chart from Elliott Wave. That's just an idea of whether the market is overbought or oversold. There's not a pattern there that I'm looking at that makes it. All it just shows you that the market is overbought. All you have to do is to look at those things, and you'll see that you don't. they can go from 91 to 108. You don't know how high that thing's going to go. So it's just a way of measuring whether things are overbought and oversold. Yes, Peak, I did meet Harvey Korman before. All those guys lived on the same block. There was Carl Reiner, and who else lived there? Carl Reiner. What was the guy that worked with, doggone it. Oh, he worked with Maxwell Smart or with Don Adams on and on so many others. Oh, he's the real genius behind it. And there was one other one there. Oh, dear. Oh, Mel Brooks lived there, too. They all lived on the same street in Beverly Hills. And, okay, let's move on to some of these. I can't think of the guy that was the genius behind Get Smart. What was his name? Oh, gosh, I can see him sitting there. Frail little guy. I think he's still alive, too. I'll think of it in a minute. Maybe at the break I'll go and check on it, and we'll be several, so we'll see. I have been to the racetrack once in all those years I came to Hong Kong. That was the Happy Valley racetrack, and that was always a lot of fun. But we'll see. Yes, that what is going on in Hong Kong is what they've done is they're starting to arrest some of the people that were involved in these what do they call these things? These big events where they were striking in Hong Kong several years ago. They're starting to rent those things, or I'm trying to do 5 different things at once. They were trying to prosecute these folks that did some bad stuff. So, all right, we'll be right back. 877-927-6648.
The TAS Profile Scanner is the most revolutionary piece of trading software that you will ever try. Wouldn't you like to approach the markets with confidence? As you begin your trading day, it's likely that you'll be faced with lots of decisions. In order to make the best decision, the first thing you'll need is a strategy that will help you minimize your risks. Whether we're in a bull or bear market, a good strategy is to have the tools needed to help you scan and analyze the markets before you trade. The TAS Profile Scanner instantly scans and filters over 2,500 global financial markets, such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, president of TAS Market Profile, the TAS Profile Scanner understands that in today's technological world, the use of top-flight software applications, automated trading algorithms, and technical analysis expertise is essential to successful trading in today's market. Whether you're looking at the trade matrix, the ETF heat grid, the market breadth, the landscape charts, or the many other features of the TAS Profile Scanner, this is a piece of software that will revolutionize how you look at the markets and set up your trades. The team at TAS has even put together a 12-part video series to walk you through every aspect of the TAS Profile Scanner, which you can find directly on the TAS order page at TFNN.com. Sign up now for only $97 a month with a risk-free 30-day trial, so you have nothing to lose and everything to gain. See for yourself how you can harness the full power of the TAS Profile Scanner by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services section. Remember, with a 30-day money-back guarantee, you have nothing to lose. Don't let another day pass you by without trying out this amazing piece of software that will revolutionize how you look at the market and how you place trades. Sign up today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, we're back, folks. And the man I was thinking of was Buck Henry. He and Mel Brooks created Get Smart, and he's still alive. He's, I don't know, got to be close to 90, I think. But the reason why I know he's still alive, I saw him on TV the other night, well, a couple months ago. Anyway, he's very, very small guy. Oh, he's 88? Okay, thank you very much. But very, very nice guy. He's very quiet. He's quite quiet, whereas Tim Conway and, you know, Don Adams, they're more gregarious than Buck Henry was. But Henry was a true genius. At least that's what they say. Hold on here a second. Let's take a look here at these Treasury bonds, folks. We talked about this important level of 147 the other day. We ran up to 148 and change. We pulled back to a perfecto this morning, 61% retracement at 147.16. And if you had your order in there at 147.17, make sure you put your stop at break even, because if that ABCD structure comes in, you'll be looking at 148.17. Possibly today with that really wide range that we're having. At least this morning we're trading 148.02. That could be a pretty good move. But right now you certainly don't want to, stand in front of it if it starts to go back down. You want to keep it as very, very slow as you can. So we'll look at some of these other things. I wanted to bring to your attention one other chart that we got from our friends at Elliott Wave, forwarded to us by several of our Den members here. This is a chart that it's nothing to do with Elliott Wave or anything, but it's showing the relationship of auto loans to student loans, and you can see the increase in defaults between 2013 and 2017. In other words, the accounts that are 90 days or more delinquent. Look at auto loans, folks. Boy, there's a problem there. I mean, well, you can see student loans is bad enough, but look at auto loans. They're really having some troubles there. That's why they give you can buy a car for almost nothing because they put it on credit, and with their interest rates at 0 or minus 0, you can get a car for 3 or 4%, sometimes 0. So that's not the way it used to be. But anyway, that's the old quantitative easing, and that's what we live with. So that's what we're going on. I was listening to Tom O'Brien this morning when he was talking about inflation. Folks, when I first started at Drexel back in '76, inflation was around 4 or 5%. It eventually got into the 1979 area. It got to be about 13% for short-term T-bills. This meant that AAA tax-free bonds in California were yielding 16%. That was tax-free. That was equivalent to about, if you're in a 50% tax bracket, that was like a 50% return, a 34% return on your money with virtually no risk. And that's what we did for quite a while. And then President Carter brought in the big gunslinger that took care of everything, Paul Volcker, and he took care of the whole mess. And I met Volcker in '88 down at the Cycles meeting down in Orange County. Anyway, let's talk a little bit about this, because this is related to credit. We've always said, I think this rally that we're seeing in the bonds is very important. It could be part of that head and shoulders pattern that we talked about before. Yeah, he's tall. That's right. He's about 6'8". He's really nice. The only problem is he smokes cigars, and he always has a cigar in his mouth. The only thing we have going in these bonds is this, and we've got to pay close attention to this, because this head and shoulders pattern that we see here in the bonds on the daily chart is about as perfect a head and shoulders as you can get. We got the left shoulder lower than the right shoulder. The right shoulder comes in at an ABCD pattern right near the 382 at 143.08. We've come down to 147, 146. I think 146.28 was the low, or something right near that. And then we backed off, and we're now trading at 148.02. If we happen to get above that 150 level, the ABCD structure on this, and remember, this is a bear market going back 2.5 years ago, we could easily get a rally up to that 157, 158 level just on that ABC pattern right here. And, they don't need any excuse with negative interest rates. Tom, my friend, there's a chance of me getting a lifeboat jacket and those bonds ever getting to 170 is like the Chance brothers coming over the hill here, over the Catalina Mountains here in Tucson. Slim and none, because that market's in a major bear market. That's and it's going to be nasty. But those were fun days, Tom. I really enjoyed it. Unfortunately, the first time I took a ride in Tom's boat, it was a big full moon there in Clearwater, and oh my God! I mean, you wouldn't believe the waves were bashing over the what do they call it? The front part of the boat, the hull, and it was soaking wet as we went into to get dinner that night. And I have a couple of witnesses. Mark P. in the room was with me that day, and it was the bow. That's what that's called. I've tried Dramamine, scopolamine, imipramine, everything. I just don't like the water. I really don't. Okay, let's move on to a couple other things that we'd like to talk about. The euro, folks. Let me just show you where we are in the euro. We're trading. We did get up. We made that small ABCD. You guys have got me confused. Made that small ABCD pattern up there at 112.82 this morning. If you'll see that, that was a 382 retracement off the high on the 19th of March. If we don't get any higher than 120 and then 112.85 where we've been today, we don't get any higher than that. That's a very, very, very weak 5-day rally, folks, and that means the euros might be getting ready to head south again. So the key level there is at 113. If we've so far we've been to 112.84 today, and if we get above that 113, then that means that yes, we could have some legs here. But right now, that's nothing more than a 5-day rally that is really indicative of a DCB, a dead cat bounce. So pay attention to that. That's going to be really interesting to see if that's going to be the case or not. We'll see that. The stock market, I think this was the 8th. Yesterday was the 8th day up in the S&P. That's an outlier event. You don't see those very often, but that doesn't mean it can't go to 9, 10, 11, or 12. You don't know. That's the main thing. Pay close attention to it, because that's where we are. We're seeing a big diversion today, because we've got yesterday we had a 3-drive pattern in that platinum up there at that 920 area, and it's backed off about $25 an ounce, whereas the silver and the gold are holding up. And silver should have, one second, please. Silver should have rallied because we were down, as we mentioned, 11 days, and it's now rallying from that level. So I think that I don't know how much more it's going to rally, but we would expect it to rally up around the 1540 level. I don't know where it's trading right now, but that's where I would think. The gold made the ABCD pattern at 1310, so we'll see if that's going to mean something. We'll have to take a look at it. Stay tuned for Rich Anderson, 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and I believe we have Rich Anderson on the line. Rich, are you there?
You bet. Good morning, Larry.
Good morning. Hey, Rich, there's a big astrological formation in the sky coming in here on Thursday, isn't there?
Well, it's snowstorm in Minnesota. Snowstorm in Minnesota.
I'm referring to your birthday, Bubba.
Yeah.
How old are you going to be now, Rich? I can't remember. You're about 65?
Yep. About.
Wow. Yeah, about. Yeah, more or less. When did we first meet? Was it 1972, 73? Was that when we first met? Do you remember?
73.
73, yeah. Okay, wow. Goes back a long way. Hey, let's start with the hogs. What do you think up here? We're got almost to $100. What's your feeling?
Well, the amount of hogs that China has liquidated almost equals the whole crop of the United States. And if and when they ever get serious about starting to buy pork from us, it can go another 20-30%. But you got to trade them technically, because of the funds, they get on a market, and you got to trade them technically. But that's why, as an example, a year ago, April cattle were $9 over June and went to $12 over June in a week, and today they're $6. Yeah, 5.5, $5.60 over. The reason the back end cattle are up is because of the hogs. But there's a lot of cattle around, so we're all depending on China buying. And that's true in the grains. It's true in the pork.
Do you hear anything from any of your contacts about how these meetings are going or anything? They don't call me anymore from Washington, so I hope they give you a call.
Well, I mean, they keep saying that they're making progress and stuff, but the bottom line is that it's about monitoring and enforcement, And once, those are the big issues that they could discuss for the next 5 years. Now they won't, because Trump needs a win. The Chinese need a win. It's in everybody's best interest. China is trying to ramp their economy back up, and believe me, that they need us to do it. And so, it's in everybody's best interest to do it. So I think you're going to see that. I think you're going to see them come together.
Were you joking about snow being up there already? We're almost in the middle of April. There's still snow up there?
The forecast, it's supposed to, I got snowed in Marshall, Minnesota for 2 days on my birthday 35 years ago. It can happen. There's supposed to be 4 to 8 inches of snow start Wednesday night into Thursday morning. There's this big front coming in, and that's going to slow down the movement of livestock, of cattle and hogs, amongst other things.
Wow. Hey, let's take a quick look at these November soybeans. We're trading at around $9.30 a bushel. What's your feeling on this?
Well, first of all, there's a crop report today, and my feeling, as I told you last time before the crop report, wait and see how the market is after. The funds hold some huge short positions in wheat and corn, and they're counting on the reports to put some pressure on these markets today. And how by the rumor sell the fact that the numbers could come out, and they come out at noon Eastern time, 11 o'clock Central. They could come out and be really negative, and the market tries to go down and can't, and what happens then. The door's never wide enough getting out.
I've been in that door before.
Especially with funds. So that's why I prefer to wait until after. It's all about planning. We've got weather's considerations, but in this day and age, with this huge equipment, it takes such a short window to get stuff in that it's not an issue.
Rich,
I mean, it may eventually, but it certainly isn't an issue now.
What about this? We hear in the news occasionally about the snow cover and all the water and everything. This means the stuff could get in pretty late in corn and beans, couldn't it? I mean, if they can't get the fields dry?
You generally get more acres of corn when you start planting early, and they're not starting early this year. There's a lot of land in Iowa and in Nebraska that got flooded, and so there may be as a million and a half acres that may not get planted to corn. Some of them might dry out and get planted late to beans, but that's June. That's a June issue. Who knows? But the market knows it. I mean, the market knows it. That's why technicals are so important these days. And you risk a small percentage on every decision you make, on every trade. That's unless you're a hedger. If you're a hedger, you're putting it on for a different reason. But for the people listening, it's about you're a poker player, so it's about bet size, the amount of risk, your take on each individual decision that you're making.
Yeah. Rich, do you feel these lows that we made in wheat down about 50 cents ago, 40 cents ago, you think those are going to hold in nearby wheat at that $4.30 a bushel? We're trading around $4.58 this morning.
I think so. The winter wheat crops conditions came out last night, and the good to excellent was rated at 60%. A year ago, Larry, we were at 30% good to excellent. So because of the snow cover, we wintered very nicely. We need to be talking about a demand story. I think the key issue is, when does the dollar roll over? Watch the bonds. The bonds seem to be the most informed people. And that, as we get a cheaper dollar, that's going to make our products much more competitive, and we're going to start to see, we're going to see that the world needs our stuff. We're going to need our corn for ethanol, not just hog feed, but for ethanol in China. So I'm optimistic, but it's going to take time. Today at noon, they're probably going to be talking to 2 billion bushel carryout of corn.
Wow. Rich, explain that comment you just made about the bonds seem to be the smartest boys in the room. What do you mean by that?
Well, they just seem to have the most information, and they're because they're financing these corporations. They're kind of looking at the books of the corporations of the GDP of the U.S. economy, and so they have the best feel of what's really going on.
Wow. Well, that makes good sense. You follow the money.
New York, yeah, follow the money. Absolutely, that's right. And the New York Fed's probability of a recession in the next 12 months, they keep a little chart. It's back up around 25%. Now, 2 other recessions we had, like the one in 08, I think it got up to 45%. But 25% is an area where you start to be careful.
Wow.
And wage inflation's going up all over. I mean, you can't walk into a store, I don't care whether it's a Walmart, a Costco, a McDonald's, or whatever, and they're offering, higher wages for anybody that's willing to sign up. They can't get the employees.
Well, that's for sure. Rich, what's your feeling on the coffee here? I know you have a few people that are interested in coffee. Do you have any? Because we're really low. We're down to 94, 95 a pound. That's historically pretty low.
Well, more than that. I mean, that's one of the favorite markets that Rick likes to write about, is markets that have dropped in price by more than 60%. That's kind of its cutoff from their previous highs, and what happens after they've dropped. Now, some drops down to 70%, but it's one you have to have on the radar. There are many coffee varieties that aren't able to grow because of the weather changes these days, but it's a long-term trade.
Rich, I'll let you go, buddy. Happy birthday to you, pal. We'll have you again soon, okay? Enjoy the snow. You bet. Bye-bye.
If you're in the CD market and looking for a secure investment, the Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in the Tax Opportunity Zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year, or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year, or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you would like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190.
It's amazing to think that Tom O'Brien started his weekly gold report 17 years ago, with the first issue published April 7th, 2002, when gold was trading at under $300 per ounce. Gold peaked at more than $1,900 in 2011, and after spending many years consolidating at lower prices, gold may be poised for its next big run. Tom O'Brien publishes his weekly gold report every Monday morning for subscribers, consisting of coverage of the XAU, HUI, GDX, the dollar, bonds, South African rand, as well as 25 different mining equities with specific buy-sell recommendations. As of April 1st of this year, the gold report currently
currently has 8 active positions with an average unrealized profit of almost 8% for each open trade. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your Gold Report subscription today, visit the front page of TFNN.com. Don't let gold's next big run pass you by. Sign up today.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour. Next on TFNN.
Okay, folks, I've been asked to take a look at General Electric. It used to be that the old adage was, as GE goes, so goes the market. But you can see that stopped a long time ago. Look at the top in 2000. If you'll notice very, very vividly, you'll see a beautiful 3-drive to a top pattern took place between 99 and 2000. This is a weekly chart. Look at on the move down. Look where the first rally came from. You'll see a beautiful 3-drive to a bottom pattern. Just as clear as can be. They're all ABCDs are perfect. It rallies to the 50% level up around 42 and then takes a flying Melinda all the way down to almost $5 a share. $4.80 was the low, and then we rallied up into 2016, which was the 78% of the high from 2007. That came in at 32 and change. And then we've had the big move down. But what we want to do now is to just go and take a look at it on a little bit shorter term time frame so that you'll be able to see it. The patterns are a little clearer because you're on a daily. It's hard to trade a weekly, but you'll see that we had some really strong resistance up there when we got to 1150. Remember the old low that we had back there in September, how the market rallied? Rallied from 11 all the way up to 13, about a 20% rally. Then it broke down badly and went right back to touch that level again. That level came in right at 1142. So that was the high of that level, and now we're coming down and we're starting to roll over. And now we're going to come down to this really, really critical level very, very shortly here in General Electric. When we make this ABCD pattern, it's going to come in around $8 a share. Because if we get much below $7 a share, this thing's going to start looking like Deutsche Bank. And if someone doesn't come in and bail them out, there's going to be a big problem. This whole thing started because of Jack Welch. Back in 2000, I remember it very vividly because it was GE Capital was making most of the money for General Electric. Their engines were doing good. Their electronic or medical imaging was doing good, but the GE Capital was making the big bulk of the money. And he wouldn't pay the guy that was running that. The guy's name was Don something or other. And so he said, I'm going to take a hike. So he left and he started his own investment hedge fund group. And the guy they brought in did everything wrong. And that's what started the move down. And then when the money started to dry up, you can see what happens. But anyway, we'll see what's going on with some of these other things. So we'll pay attention to that. Yes, very few people know about that, but they don't know that. Do you remember what was that guy's name? Al Sanders, Hacksaw Al? That was the guy coming in. He was a big scam artist. All he did was come in and, strip down companies and then leave. What was his name? I can't remember, but he went to prison because he did a bunch of stuff, but who knows, Al, I can't remember his name. It was Al, no, it wasn't Al Bundy, no. It was Al Sanders or something like that. His nickname was Hacksaw Al is what it was. I can't remember. I think if he went and did But chainsaw. Is Al Dunlap? That's who it was. Yes, thank you, Mr. Z. It was not hacksaw. It was chainsaw. You're right. Anyway, let's move on to some of these other. I actually have met Carl Icahn a couple times. The gentleman that worked for Kyle Icahn at TWA was Frank Pulcano. His son Rick is a good friend of mine and one of my students, and I was in Florida once, and he came by to visit Frank, and I happened to be there, and in walked Carl Icahn and his wife, and we had a nice lunch, and a very, very pleasant gentleman, had wonderful stories to tell. All right, let's move on to a couple other things that we want to talk about here related to the commodity markets, folks. We talked about this coffee. We got down to the 61% retracement at 92.50. We've now turned. We're heading back towards 95. If we get above 95, it could have legs, folks. That's the main one to look at, so pay attention. Now, one other one that very few people talk about, but this is for you, Mr. Z. Pay attention to this. We've got a crop report, but here's Minneapolis wheat setting at the 61% retracement. I mean, the whole world is bearish on this, so I would not be surprised to see a rally, but with these crop reports that we're having today, it's pretty. The question is, did oil top? Yes, I do believe that it did. I was watching it last night, and I believe, did I save that? Oh, I don't know if I did or not. Shut the front door. But one of our friends from the UK sent me a wonderful chart on the oil, and I didn't save it. But yes, I believe that it did. I was watching it last night because one of the things that I follow, of course, was my artificial intelligence program. And this is what was happening really early this morning. This was the forecast that I was looking at. You'll see that was around that 460, 480 we broke down, and we're starting to break even more today. So we'll see if that's going to be a big top or not. But that 61% retracement was actually at 63.95, and we went a whole 80 pips higher than that, which is quite a bit. We didn't have a very good pattern there because it was a straight up move, whereas with the Dow, at least you had a little pattern to to hang your hat on. That's really what we were watching when we were looking at that. Whether that's going to be the case or not, we'll have to wait and see. That's the $64 question as we're watching some of these things. We're trading at around 28.80 now. We've come down about 9 handles, which is really nothing to look at, but that's really what we're watching right now. It doesn't mean too much. The bonds are the interesting one because we went right to that 61% retracement. We just took out the highs of a few days ago at 148.08. So that's made about $750. If we get above 17, that would be $1,000 in one day. And with this big move, this tells us that this thing could easily start an attack on that 150 level. But we've got to watch these retracement numbers. There's a lot of resistance coming in these bonds at that 149.16 level. That's going to be the 78% level on the way back up. And ideally, what we'd like to see is to have it come in on the the exact time of 3 days. In other words, a 3-day rally off the bottom. So we're in the 3rd day of it now. So with this big move now, unless it reverses right here, which is pretty strong, that means we're going to have 1, maybe 2 more days. And we've got a really big thing happening today astrologically, folks. At 12 noon, we've got Jupiter's going retrograde. Norm Winsky pointed that out to us, so we need to pay relatively close attention to that. So we'll see. And want to be able to see. Okay, we have someone calling from Bradenton, Florida, right near my favorite place in Florida, which is Longboat Key, and she's asking to us about UNG, and I believe that's the natural gas, if I'm not mistaken. And if anybody should be talking about natural gas, it would probably be me. Hold on one second, and we'll get this up here so that we can take a look at this for her. Here it is, right here. Get to take a look at. I believe we're making a pretty good bottom here, and I believe UNG is the ETF for that. We're trading around 270 right now. The low has been 264. We've hit that 4 different times over the past 2 years, so there seems to be really good support. As long as we stay above 264, it looks like it's going to be a really good thing to look at. Now, I need to double check the UNG, but we take a break and we'll be right back.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get the competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Back, folks, and we want to remind each folks that, we've had a pretty strong move in these bonds this morning. We took out the highs of the last few days. Longer term, I mean the next 3 or 4 days, we want to be finding a place to go short. The ABCD structure on this would take us up to around the 149.17 level, so that's still quite a ways to go. Right now, we're trading at 148.05. The stocks have had a pretty good sell-off, about 15, 15 points now, not very much, but that could mean something from a top perspective because we were watching those smaller patterns that I posted into the newsletter. Very, very important. Watch the euro, folks. This 112.84 has held so far. We're trading 112.78, and if it starts down, that means that that dollar is going to, perk up again and maybe head back to that 97 level in the dollar. But right now, we're trading at 127.77 in the euro, and as long as we stay below 113, it looks like it still has a lot of bias to the downside. That's what we would be watching today for sure. So we do have a crop report. We'll talk about that tomorrow, of course. I'm trying to look at wheat. Tomorrow I'll have a little bit of a technical picture I want to show you on wheat, on how it relates to the lunar cycles. Comes out of the book by Dr. Andrew Lowe, The Evolution of Technical Analysis. And regarding Shane Smolian, folks, he's just very, very busy. He's managing money now. He doesn't do the wolf trader stuff anymore. He's a full-time trader manager. Very proud of that young man. And he's one smart cookie. But one of these days he will be on. I chat with him all the time, looking at pictures of his kids. And but he will be one of these days. He'll take a break, and the market will force him to take one because he'll get too tired. Anyway, we'll have him on hopefully one of these days, relatively soon. So, live every day in an attitude of gratitude.